Hello, everyone. How are you doing this evening? Do we have sound and screens? Most excellent. Thank you very much. Awesome. Well, I am really looking forward to diving into this here tonight. This is something that I've been working on for a really long time. So I'm really excited to share it with all of you. So let's go ahead and dive in. So what we're going to be talking about tonight is rinse and repeat setups, okay? These are going to be based on a calendar system, and they're high probability, backed by statistics and, well, probability, of course. And what this is a core strategy that can be your baseline, and it can be combined with any additional strategies. Because of the way that this strategy works, it's set up so that you can trade it on a quarterly basis and therefore, ideally, make quarterly profits. So my name's Danielle. How many of you have been through a class with me before, and how many of you this is your first time here? And also, I would love to know, if it's your first time here, how did you get here? Ooh, Puerto Rico, awesome. First time, many classes, awesome. Okay, great. Word of mouth, that's great. The book, been through my classes, many classes, awesome. So we have a pretty good mix of people who've been through many classes and a pretty good mix of people who are new as well. So I always try to do my best to cover the information so that both sets of people will come out of this and say, hey, I'm so glad I spent an hour here with you tonight. I learned something, and it's going to make me a better trader. So that is my goal here tonight. You already got profit with me from your free YouTube video. Awesome. Boom. That is great. Well, so my name's Danielle. I'm the VP of options here at Simpler Trading. I'm a trader, market analyst. I'm also a frequent commentator in the media. Primarily, I focus on directional trend following trades. The reason for that is because I have been mentored by John Carter. And of course, that is his key setup, directional momentum trades. Now, over the course of time in my career, basically what I've done is I've taken different setups that I've learned from my mentors, and I have made it work for me in my own specific way. And so what I'm going to be teaching you here tonight is the method in which I have done that. I like to take hot momentum moves, and I like to use those moves, and I like to use them to trade options, and I also build long-term stock accounts. Now, it wasn't always like this. I actually decided to learn how to trade from a suggestion from my father. That's me back in, I don't know, maybe 2010, something like that. I should get the date on that picture. But back when I was 25, I had graduated from college right when I was 22, and I ran off to Costa Rica. I thought it was going to be a great, start to volunteer in a developing country and teach English. Well, it was there that I fell in love, and I was set to get married with the person that I thought was going to be with me forever. It ended up that he actually was quite a bit of a scam artist, and I ended up leaving him when I had a 2-week-old baby. I had nothing. I had to go back to my parents, and you know what my parents said? They said, hey, Danielle, I think you should learn how to trade options from this guy named John Carter. Now, I thought that my dad was completely crazy because I didn't even know what options were. And in fact, I used to be a teacher. That's what I was doing. I was teaching in Costa Rica. I was teaching English. But I thought, well, I'm going to learn from this guy named John and see where it takes me. So I learned completely online, just like a lot of you are doing right now. And now I teach other people how to trade, just like previously. I used to teach elementary school, but now I'm teaching the stock market. So the moral of the story is that I love teaching, and I also love the stock market. One of the reasons why I love the stock market is because, of course, you can make money on your own at home. And this is a screenshot of my account from last year. So this is an account that I grew 700%. Yes, last year, it was a really awesome year. It was definitely a crazy year, especially with the pandemic and everything else. You can see down here on this equity curve that there's going to be jumps and there's going to be lulls. There's going to be jumps, there's going to be lulls. Jumps, lull, big jump, lull. And this is very normal when you're looking at an equity curve of an options account, okay? A lot of people get into options and they think it's going to be just like this. But in reality, you're going to have moves that are more like this. The key is to identify the moments in time where you're getting those massive peaks, figure out why you're getting them, and figure out how to do it again and again and again. For me, as a momentum trader, I have to be able to recognize when those peaks are happening so that I can predict them and nail them again and again. Last year, my biggest percentage gains were from January, April/May, July, September and October, and then a little bit into December as well. But the key is you have to know why that's happening so that you can repeat it. And that's why I'm here with you here today, because I love sharing what I've learned. And I want to share this with you because, well, I never would have gotten to where I am if mentors before me wouldn't have shared what they knew with me. So let's go ahead and talk about the opportunity in the market right now. The major opportunity right here is the fact that the NASDAQ has been pulled back and it's been consolidating over the course of really the past, let's say, 2 months, month and a half, okay? Right now, what we're experiencing is a major breakout in the NASDAQ. We have a squeeze here. We have a VZO breakout as well. But this isn't just a coincidence. This isn't like it came out of nowhere. This is happening right now because of, well, the squeeze, but also because of the run into earnings. Here is a message that I sent out to some of our members. This was on March 29th. And this was actually when the NASDAQ was still stuck below resistance. And basically what I was saying is that I was looking for the main catalyst to be earnings. And I was looking for price to break out to the upside. Now, you could say, well, how would I know that's going to happen? I never know something is going to happen for sure. What we're looking at is probabilities, okay? And we're looking at what typically happens around a certain time frame. And what typically happens around this time frame going into April is that the NASDAQ typically rallies higher into major tech earnings that occur here, here, and here. So when you have that knowledge, you're able to set yourself up for success and focus on those strategies. So let's talk about a couple different key terms, all right? The run into earnings. This is one major fact that we're talking about here tonight. The run into earnings is the momentum move higher that bullish stocks make prior to their earnings report. The hot zone, I'm sure you've heard about the hot zone, okay? The hot zone is the high probability moment in time to get into this trade. So we're going to talk about this, why this happens, why the run into earnings works. But the run into earnings is a concept. The hot zone is the method in which you get into the trade and therefore make money on it, all right? Let's talk about why the run into earnings works, all right? First of all, there's very few known quantities in the market, okay? We never know, what the next policy is going to be, or we never know exactly when a ticker is going to go into a squeeze. But we do know that public companies report earnings quarterly. We also know that investors anticipate these reports. And what happens when investors anticipate these reports is that they buy stock in the companies that are expected to do well prior to the report. You know why? Because they're, looking at something like Microsoft and they say, hey, Microsoft typically trades higher after earnings. Let me buy some shares before the earnings report, and perhaps I will get a big jump overnight, okay? So what happens when people do this is that causes the stock prices to go higher. So those bullish stocks typically exhibit a strong move going into their earnings report. Now, this happens, of course, if you're just trading stock, but if you're trading options, you can really take advantage of this because of the way that options behave and because of the facts that we have in the options market. For example, options are priced based on the price of the underlying stock and also implied volatility. While price typically trades higher going into an earnings report, so does implied volatility. So you basically get a double whammy of upside when you're trading options with this setup. So let's talk about the run into earnings plus the hot zone. You take the idea, right? It's a pretty basic idea, but you have to back that with statistics and patterns. You can't just, pick some random stock, use a dartboard and say, hey, I think this stock might try to trade higher going into earnings. No, you have to learn how to use high probability patterns and select the best ones that are most likely to work in this setup. So that is why I use the hot zone. So basically what the hot zone is, it's a tool that it's going to identify not only the entry points and the time zone that's best to get into the move, because you can't just say, okay, well, I'm going to buy it exactly 21 days prior to earnings. It has to be a combination of a time frame, which is usually about 21 days, plus the statistics, all right? So what the hot zone does is it creates these overlays right here so that you can visually see on the chart exactly when a company is entering the high probability zone where it's likely to trade higher. When you look at the statistics up here, for example, on United Healthcare, it's demonstrating that on average, 21 days prior to earnings, it usually trades about $6.94 higher, okay? So that gives you some parameters that you can actually use to make a trade once you get into the zone. So down here in this part, you've got the pattern. Up here, you've got those statistics that give you the probabilities, okay? Here's an example of a Roku trade. I actually just got into this trade. This one was just about to enter the hot zone. So you can see the hot zone is right here, right when the 21 days start. And boom, it was up 10% the day before. So it's never going to be, exactly on that 21-day time frame, which is why you need to use some technical analysis. But it's usually right around this zone, and that is going to be the hot zone. With Roku, you can see that it has a much higher move than United Healthcare, okay? There's a lot more meat on the bones. This ticker normally moves 14.78% higher, okay? That's a huge move. If you knew that a ticker was very likely to have a 14% move in a 21-day time frame, I mean, wouldn't you want to be in it? I would. So that's why this is incredibly helpful, because you can not only see if it's high probability or not, but you can also see what the actual potential move is so that you can make a trade on it. So here's an example on Microsoft. Microsoft, I think, is probably the best run into earnings ticker that there is. This thing trades higher into earnings almost every single quarter. And for example, on Microsoft, right when it entered the zone, it had a couple days of sleepiness and then boom, off it went, okay? You can see on here, the average move is about $10, 4.53%. So that gives you some parameters for an options trade. With this one, the way that I traded it was with a butterfly. So on this one, it was almost a double, not quite. I got in for $4.46 and out for about $8 right at the beginning of the run into earnings in the hot zone time frame. I also just got into Amazon. I actually got in and got out of one trade already. I got out of one trade that was targeting 3,300, just popped up there today. And I have another trade that is targeting 3,400 because Amazon just hit the hot zone and then boom, took off. Thank you. I just made $20 per option contract in Amazon in just one day today. You are my hero. Aw. Thanks, Puerto Rico. I'm guessing you're in Puerto Rico. I've been there and I love it so much and I can't wait to go back. Awesome. That is great. So here's another one. Pinterest is off and running. Pinterest hit the zone, boom, and off it goes. So, we all know the market has been just kind of back and forth for the past month and a half, and I would consider it to be a little bit boring because, well, I love momentum trades. But the great thing about this setup is that we know when it's coming, we know we can get ready for it, and we know that, boom, things are likely to take off. And yes, absolutely, Apple is in the same boat too, and I did just get into that one today too. So what's really funny is that I traded this setup from day one. This is actually I laugh at this picture because this is the very first media segment that I ever had. And I was very terrified to do a media segment on camera. But I traded this setup since the very beginning when I first started trading. Because when I first started trading, I didn't know anything about the market. I didn't know how to read charts. I didn't know anything about macro. All I knew was, all right, I'm going to trade the FANGs and they probably go higher into earnings. So I'm going to, throw a dart out there and see if I can sell some out of the money put credit spreads and cross my fingers so they trade higher. That's what I did in the beginning. But over time, what I've done is honed it into a system. So throughout that time and throughout that learning phase, because let me tell you, it was a very stiff curve to the upside, especially in the beginning. I came into the stock market knowing absolutely nothing. You guys would laugh because my very first notebook, the first page is bullish means it's going up, bearish means it's going down. I mean, that is how new I was. So in doing this setup from the very beginning, here's a couple problems that I've come across. Number one is when, okay? When do you get in? That's obviously a very major problem. And with pretty much every single setup, most setups that you're going to use are going to require a certain market condition. Is the market strong to the upside? Is it choppy? Is it trending lower? That's great when you can recognize a variety of different setups, but you never know when they're going to occur. But what's great about this one is that it's based on a calendar system. The next problem is going to be where. How can you find these tickers? How do you know which ones to trade? Well, what I found over time is that preparation is absolutely critical. And when I first started trading, I mean, it took me, I would research 3-4 hours a day just to find one setup. And then I wasn't even sure if it was a good setup or not. But what I've learned over time is that you can greatly cut down that preparation time and you can make it as such that your prep identifies your high probability bets. All right. In the past, I can't tell you how many times I've missed moves simply because I just didn't see them until it was too late and it was already off and running. The goal as an options trader is to be in the move before it takes off. That is how you're going to make the most amount of money. So you have to find methods that enable you to do that. Another problem that I've come across is why. All right. If you don't know why you're getting into a trade, obviously, this is a big issue. Back in the day when I just thought, hey, I think Tesla is going to go higher into earnings. I'm going to sell an out of the money put credit spread, and I hope it works. It's funny how it did work sometimes, but to be a real trader and make money over time, you have to have a pattern and numbers to back up your idea. That is going to improve your work more than anything. The last piece of this is how, all right? It's like, okay, we know that tickers trade higher going to earnings. We know that we can identify which ones are better than others. We know that we can use statistics to do that. But then what do we do with it? Do we trade calls? Do we trade puts? Do we trade flies? That is going to be a key portion of this setup, okay? So basically what I've done is throughout my career is I've put all of this together, just improving it every quarter, every year. And that has led me to come up with the full quarterly profits system. The goal here has been to identify the highest probability bets within the right time frame that I can execute like clockwork. So here is the checklist that you need to make quarterly profits picks. Okay, this is the exact checklist. You need, number one, an overall understanding of the concept. Do we have an understanding of the concept? Yes, no, maybe so. You're following me. Absolutely not. Explain it again. Yes, yes, yes. Okay, got it. Excellent. So we've got step one. A method of finding and narrowing down potential stocks to trade. That's pretty easy. That's just scans. But we're going to talk about that. Next, you have to have stats to back up your ideas, because otherwise you're throwing your dartboard, right? You're saying, hey, I think this one might work. Not really sure. I'm going to try it out. Next, you need a method of selecting the final tickers to trade. Even when you have a scan, your scan is going to come up with like, I don't know how many results, just depends what week it is and everything else. But you can't trade every single one. You have to learn how to pick the ones that could be the best versus the ones that maybe really don't have so much meat on the bones. And then last but not least, you can absolutely trade this just with stocks, but I do like the options bump. So I'm going to be talking about how to trade these setups with options. So the base idea is the start, but you need to understand that different tickers have different personalities. They have different time frames, pullback zones. They're going to be in different sectors. They're going to have different moves, stuff like that. Okay. So that's why you can't just, close your eyes and buy it 21 days prior to earnings. But that is why we have the tools, and that's what helps us narrow our focus. You have to be a bricklayer when you're a trader. I know that it seems boring doing the same thing over and over again, and people get distracted with the GameStops and the Tilray and everything else. And while that may be entertaining to read Wall Street bets, it's not going to make you a career over time. Patterns are what's going to make a career over time. And in the stock market, you have to understand that there's going to be peaks and lulls. There's going to be times where you're stuck in a lull, but you have to recognize how you can get out of that by identifying a high probability moment in time where the market's likely to break out. The best way, I think, to identify some of these is going to be with scans. You can absolutely use a calendar. The way that I used to do it is it would take me so long. So I would use a calendar. I would go through the calendar every single day, and I'd start 5 or 6 weeks out from earnings, and I'd write them all down manually in a notebook. I drove my husband crazy because I'm writing things with a pen and paper and printing papers off everywhere, and there's piles of paper everywhere. And, you got to figure out ways to make your life easier. So what I have done is come up with some scans along with some custom columns. So basically what these scans do is they run scans looking for tickers within my dedicated time frame. They're going to tell me exactly when the ticker is reporting, how many days we have, and they're also going to tell me the pre-earnings average. You have the pre-earnings average in percent as well as dollars. So if you're the type of person that says, hey, I want something that's really exciting, I want something that has a lot of meat on its bones, and I'm willing to trade something that's going to be up or down 5, 6, 7%, then there you go. You have Carvana and you have Etsy. If you're a person that says, you know what, I want to take it nice and slow, but I want a high probability bet, well, here you go. You have KLAC. Normally, it's up 3%, $11 prior to earnings. And this is also going to tell you if there is a squeeze or not. So that really narrows it down for you. You don't have to sort through calendars. You don't have to have piles of paper everywhere. That makes it very easy. Here are a couple different high probability tickers that are coming up from my scans. So Apple, we did talk about this one a little bit in the beginning when we were looking at the Amazon chart, and somebody had noted that the Apple chart looks very similar. Apple, yes, is one of the high probability runners into earnings. And also, guess what? Apple also usually has a post-earnings move as well. Another one that's coming up is going to be Amazon. We also have Caterpillar. We have Carvana, AMD, Anthem. Now, these are just a few that I have picked out. Like I mentioned, you know, when I first started trading and I was learning from John Carter, and he's doing all these crazy things with Tesla, and he's putting huge trades on, and I was a broke single mom, and there was no way I could do what he was doing, but I wanted to use the same strategy. So what I did was I looked for tickers that had lower priced options and had smaller moves, because that was something that I could take a piece of and trade with a small account. So that's why the setup, I mean, it really works for people with large accounts, people with small accounts, people with medium accounts, because you can decide for yourself, all right, I'm sorry, Amazon, that's just too much for me. Carvana, it's too much for me. I would rather trade Caterpillar and AMD. So when you're looking at all the different tickers, you can pick an individual stock, or you can just trade the indexes. This is a trade that I made in the options room. Basically, what I was looking for was for the NASDAQ to trade higher going into earnings. It happens almost every quarter. Usually Q3 is one that does not work very well. Q3, for whatever reason, it's just a little bit naughty, so beware of that. But the other 3 quarters works very well. So in this example, what I did was I just simply traded the NASDAQ with the butterfly going higher for the run into earnings. So, you know, if you're someone who likes to trade the indexes, you can use that as well. The reason why I like this setup so much is because when you're a momentum trader, you need to have a catalyst, okay? You need to have a reason for the market to move. This catalyst is based on a calendar system, so you know when it's going to happen. Right now, we're right about here. We're just kind of borderline week 1, week 2. Someone just mentioned the JP Morgan setup's going well. Yes, it is going well. Usually the banks are going to report right around here and here. And then that's when everything really takes off. So the market can be a little bit sleepy in the beginning. During this time frame is when I just start to get into the run into earnings. And then what will happen is when the banks report, especially if the banks report well, okay? If the banks report well, which by the way, throughout the pandemic, the last 3 quarters, they have had phenomenal earnings. What has happened is people say, oh my gosh, the banks are doing so well. This makes sentiment just kind of explode, and then boom, everything just takes off. So we're already starting to see that with JP Morgan, with Goldman Sachs, with Citigroup. Some of them are still consolidating right now, but that's what I'm looking for right here. And we're basically just right in the meat of the moment. So typically during this season is when I'm going to have my really big days. Here's an example of one of the days from, I don't know, this was, oh, I remember, this was last October. That was when I kind of doubled my account in the course of a couple weeks there. So this is a $6,000 day, and it's a combination of picks. The thing about the setup is that you have multiple different tickers at the same time, all rallying into earnings, and that's why it adds up over time. So this is where really I'm going to see some of my biggest equity jumps. So if you go back and if you look at this screenshot that I showed you at the beginning of the webinar, which was 700% over the course of last year, you can see that those major jumps are here, here, here. This was the big one right there. That was amazing. That was Chewy and Peloton mostly. And this one right here, which was the Santa rally / the beginning of the run into earnings. Awesome work. I wish that guy in Costa Rica could see you now. That makes me so happy. So this was the account that I was trading prior to the other one that I was just showing you. And I mean, it's the same thing. you can see, you know, a big jump here, then you have a lull mid-February, big jump here, lull March. March, I swear, is just always seasonally just so choppy. And then boom, you know, lull here. So with this account, what I ended up doing was I ended up cashing it out and putting a down payment on a lake house. So that's why it, you know, withered to nothing at the end because, well, I had to keep taking some money out of there. But let me tell you, it was probably the best thing that I have ever done. So what we're looking at is just a combination of trades. So during this quarter, that was the October quarter, you know, there was Best Buy that was hot, John Deere that was hot, Netflix that's hot. And you have to pay attention to the ones that are hot because those are typically the ones that are going to be good quarter over quarter. This is a screenshot from January of 2021. The ones that were working that quarter were not Costco. And by the way, Costco has very bad stats. Now that I have my amazing new tool, I would have known that Costco does not actually ever work at all. So I could have exited that one out. But anyways, we had DK&G, Jack, and Neo, Nike, and you know, it adds up to like $4,500 in a day. So the moral of the story is that right now we are here. That means we have tons of opportunity, and the opportunity is going to be through a combination of multiple different trades. All right. Throughout this whole presentation, I've primarily been talking about the run into earnings. That's because I'm a momentum trader. I love swing trading. I love being in a trade for, you know, 2 to 4 weeks, sometimes a week. And it's just so consistent. However, I also do like trading the report. Now, trading the report isn't for everyone, but how many of you like overnight trades? Because it's pretty nice to get into a trade one day and get out the next day. And you know what's great about that? And especially as someone who has, you know, traded many different accounts that were under $25,000, you don't have to use a day trade. So, you know, you get in one day, get out the next day. It's great. So I do like those overnight trades. Where did you get the slide of earnings announcements? I think you're talking about the scan. But basically I pulled those tickers from the scan that I was using, and I picked those out. So the run into earnings is great. If you can nail that, you don't really need much else, but obviously it is seasonal. So if you can combine it with other things, you know, there you go. You have a more well-rounded price strategy. But at the same time, if you know that October is kind of slow, you know November is kind of slow, you know that March is kind of slow. I mean, this is one of those things where you can take a little bit of a break and then just come back in April ready to go and nail that season. So this was from January of this year. Just with even in the first 3 weeks of January, I already had a $9,000 profit on a $33,000 account because of this season. Now, there are absolutely going to be losers, okay? There are going to be losers. But what I can tell you is that, honestly, a lot of them are based on human error, okay? Yes, Costco. I see how long you've been using this setup. You mentioned you didn't see Costco in January 2021. So what I meant from that was I was looking for Costco to have a run into earnings, and that was before I had fully built out the hot zone tool. And so I was thinking to myself, all right, Costco, I think it's going to do well because, you know, you have the pandemic and all these other reasons. It also had a squeeze. But that was before I had the tool fully built out. Now, with the tool, I can see that Costco actually does not have a high probability run into earnings at all. So my idea was not backed up by statistics. And so this is part of, you know, the problem with this setup in particular. The losers that I have are typically based on human error. Okay. There's going to be times where I get shaken out, you know, especially, the volatility has been pretty crazy lately. I'm pretty sure that a few of you may have gotten shaken out at some point, right? There's also going to be times where I get in too early, or maybe I tried to buy a breakout and I was actually getting in too late. Or this one is huge, letting your emotions betray you. We're going to talk about that in a minute. So sometimes there is going to be a quarter that just happens to be a dud. Usually if it's going to be a dud, it's going to be Q3. It's just how it works out. I don't know why. It's just seasonally not as great. But as you can see, last year, I actually had a fantastic Q3. So that doesn't mean that it's not going to work. It's just usually the quarter that's a little bit fickle. So here's an example of the way that I used to do this trade. And I'm sure a lot of you who are in my mastery or in the trading room have seen me do this a million times. I look at a ticker and I say, okay, is it in a trend? Yes. Do I have green trend strength candles? Yes. Let's highlight the time frame before earnings. Does it go higher? Let's see. Yes, it does. Yes, it does. Yes, it does. Okay, so I'm going to hypothesize that then the next time it's going to go higher. That's the way that I used to do the setup. And it worked pretty well, but I wanted to make it better because I always want things to be the best that they can possibly be. So I've been working on developing this tool for quite some time. And what I wanted was an overlay that would tell me the highest probability time for me to get into the trade. And I also wanted the statistics that were going to tell me, number one, does it move up? Does it move sideways, or does it move down? The reason why you've seen all of these with green bars up here, by the way, is because I'm using the examples that actually work. If you look at some tickers that don't actually work, what you're going to find is these bars are actually going to be yellow or they're going to be red because they're color coded. And that will tell you right away, like Costco, sorry, this is not a great run into earnings shot. Okay. So if I had had the hot zone previously, I would have seen, hey, guess what? Pinterest is actually normally up 13%. And guess what? This is a great time to get into it, either 13 days before or 8 days before. Now, what ended up happening on this Pinterest chart from last quarter, which is so sad, was I got in right here. And guess what? I got COVID. It was terrible. I was so sick. I couldn't even get out of bed. It was a very, very terrible case. I survived though, so I'm very grateful. But I let my emotions take hold. And I was sitting there and I was in bed and I was sick and I was watching this thing gap down and I just thought, oh my gosh, I have to close all my positions because it could be down here tomorrow and I'm too sick to deal with this. Well, what I should have done was instead look at my stats and say, hey, you know what? I picked a really high probability bet and I'm going to ride it out. Now, I didn't do that. I closed this trade at the dead lows. I let my emotions get a hold of me. Very bad choice. Like I told you before, the concept is not difficult. The part that you have to focus on is when, where, why, and how, which requires a little bit of a nuanced massaging, okay? But I'm human, just like you. We make human mistakes. We get sick. We start to, look at something when the market's gapping down and everything looks terrible. But the key in trading is to find methods to bypass your emotional mistakes. Now, I don't know how many of you saw this from the free videos or everything else, but John, can't even believe this, made this $5 million trade in Google yesterday. And one of the most important things that he said was, if the setup is still valid, ignore your emotions or they will betray you. He said that he sat in this trade for like 3 weeks, did nothing, and then boom, off it went, okay? So it's really important to be able to find methods in your trading to bypass those emotional mistakes. And using tools like statistics are one way to do that, okay? Yes, I can definitely take questions at the end, Popeye, absolutely. So I do have some time set aside for questions, and I will definitely get to that. All right. I wanted to ask this question, and no offense intended. If you're making millions, like they're saying, why are you doing this? That's a great question for John, but I think that John just loves trading. He told me once, he's like, I'm going to be on my deathbed in the hospital and I'm going to have my laptop in my lap, and that's what I'm going to be doing. So, so what you have to do is you have to have the calendar plus the setup plus the trade. Calendar is one aspect, then comes the setups, then the stats. After that comes the options trade. Now, we're going to flip through a couple different examples here. The run into earnings is great because it can be combined with the short squeeze, with the squeeze pro, with the 5-star setup, and with Phoenix setups. The more you can combine it, the more high probability you're going to have. So here's an example on John Deere. I really like this one because this is a great high probability trade. Very nice, easy trend. It comes around quarter after quarter. It's backed up by the stats. And I had a nice 75% winner on a butterfly. Small account trade, nice, easy growth. And if you look at the stats tool, you can see that on average, it trades higher by about $24 when it's in the hot zone. I will also trade IPOs as well. You have to keep in mind, though, that these IPOs are not going to have the stats to back them up. But the reason why they'll work is because they have a lot of hype around them. And it's the hype that causes the run into earnings to work so well. So on this one, I traded it with a combination of butterflies and long calls, 109, 110% winner. Next one is one of my favorites, which is TXN. On this one, I used a butterfly. The reason why I use a lot of butterflies, people are always like, why do you use butterflies? I had to adapt when I was learning to trade in a way that would allow me to grow small accounts. Because when you're buying a long call, especially on something like TXN, it's going to be very expensive. And if you can make your cost basis a third or a fourth of what it would be when you're buying a long call, then you have opened up your world. You have so many possibilities. And the best part about it is on a butterfly, you're usually risking 1 to make 4, if not more. On a long call, you're usually risking 1. And normally on a long call, I'll make like 50% or 75% on the winners. On a butterfly, 50 or 75% is the low end of the range. So with TXN, here's a combination, multiple different trades at the same time. It equals to overall a really strong run into earnings. With this one, you can actually see that the 21-day average is great, but guess what? The 8-day average is not. So this tool is demonstrating, hey, guess what? Don't try to buy it 8 days before earnings. If you want in on the move, you have to get it earlier. Different tickers are going to be different. Taiwan Semiconductors is another one that is very high probability. This one has, on average, a 10% move higher, okay? And this is one that, I traded in Q3. I had some 45% gains on some long calls. Those are some pretty cheap long calls for 374. And it was, again, another combination trade throughout the season. Now, what was very sad was in Q4, I actually completely missed this trade. Now, how did I do that? I know that it's a strong one, but it's really hard to keep track of all the different tickers that are out there. But guess what? This quarter, used my newly minted scans, and boom, I was in at the lows, and I've already gotten out of that one for a 3x gain in my mastery program. Next is Netflix. This one is high probability, and the best part about this one is it works even when the market's down. So this is an example from Q3. I had a butterfly. I was targeting the $500 price point. And boom, you were down here on the lows and had this massive rally going into the earnings report that just happened to start immediately when you hit the hot zone right there. So you can see on this chart, the last 2 quarters, you had Q4, which actually did not work. So even though it has a high probability shot, last quarter, it was a bit of a dud. It's going to happen sometimes, okay? And that's why you have these screens so you can see which quarters usually work, which quarters usually don't. But on average, it moves higher. And that's why I got in it again this quarter, because we're doing a rinse and repeat strategy. Another one that I love, this is the one that, this was my darling last year. I traded it over and over and over again. Chewy, very high probability to the upside. You can see the screens are pretty green. And with this one, I used long calls. I used butterflies. This was in Q2. Then I had some more trades in Q3. These were some more Q3 trades. So basically the idea is that you can recognize these types of tickers and then you can just do it again and again and again. But you do have to understand the how, all right? I've been able to grow multiple different options accounts, okay? Options accounts, stock accounts, futures accounts. I actually don't have that one on there. But I do it using the same setups on a regular basis. What you have to do to grow options accounts is you have to use a combination. You want to use some spreads, you want to use some calls, you want to use some flies, but you need to have a method, you need to have a strategy and patterns and risk, and you have to know your risk to reward, okay? So after earnings, after the run into earnings is going to come another opportunity, which is going to be an actual earnings trade, okay? The reason why those are great for options traders is because options traders can use them to take advantage of changes in implied volatility, changes in options pricing. You can use the market maker move. You can trade the IV rise and you can trade the IV crush, okay? Earnings trades can get a bad rap, but the problem is most people are trading them without using any facts or statistics behind them. And you need to use those if you're going to have some high probability trades. So what I'm going to show you is that you can use these stats to find overnight opportunities. Let's look at this one. This is ENPH, and we're going to use a different part of the tool now. When you look up here, you can see how many quarters you're analyzing. And you can see, guess what? It beat estimates 8 times and missed 0 times. If you're looking at a ticker that's beat 8 out of 8 times, obviously you're going to want to go long, right? You also want to overlay this with the percentages and the moves. You want to see what the average move is. So that helps you get some statistics to just sell a put credit spread. In this example, I sold a put credit spread, took 66% profit on it overnight, and next was TTWO. So this is one that I like for a neutral earnings trade. On this example, you can actually see that, okay, it was up after earnings, it was down after earnings, it was up after earnings, and it was down. So that told me that I needed to do something neutral. And guess what? I had some ranges in which I could do that. So I used an unbalanced fly strategy where I actually got into this for a 24-cent credit and out for $2.42, which was a nice $500 or so. And I think that was like a 3-day trade. So it wasn't exactly overnight. I think I got in on Tuesday and out on Friday. So Zillow, this is a winner from last quarter. And I also just got into this one today. So I had sold a put credit spread on this one. You know how hot the real estate market is right now. It's pretty crazy. Pretty crazy. So last quarter I had sold a put credit spread on it. And guess what? Just as of today, it entered into the hot zone. Okay. So this is in a great spot. I just found this one right at the end of the close today. So I didn't have time to post new trades on it. But this one's entering the hot zone right now, and I'm definitely going to be trading this one. So this is a quarterly system. It's all about rinse and repeat, high probability setups, and using your tools to conquer everything that stands in your way between you and making money, all right? So I talked about how this was one of my first setups, and this is a picture of me a couple years ago. And for me, what I wanted to make this visual. I wanted to make it easy. I wanted to be able to look at the chart and know within 5 seconds if the ticker I picked had a high probability shot of winning or not. Before, I used to just, use the dartboard. I'd pick a FANG stock, I'd pick a calendar day, I'd say, okay, maybe 2 weeks is a good time. I didn't understand technicals. I certainly didn't understand macro. And now I do this with stocks that have a high probability shot and liquidity. I use tools to pinpoint the entries and exits, absolutely use technicals and macro, and apply some relative strength. So strategies are going to evolve over time. In trading, you're always going to be updating. You're always going to be changing. You're going to be moving with the base ideas and adding this current insight. And it's that evolution that leads to the overall account growth and success. You have to be able to recognize the how, the when, the where, and the why. So with the system, the answers to those questions is, hey, number one, we talked about the understanding of the concept. I know that you understand the concept, why it works, how to get in. We talked about this. A method of finding potential stocks to trade. You can use calendars or you can use the scans, much easier. The statistics and proof to back up ideas are going to come from the hot zone. And a method of selecting tickers to fit that pattern is going to be a combination of technical and fundamental knowledge. And then using options trades that make money, it's going to come with just a little bit of some options knowledge. So this is why I have created the quarterly profit system. I have a calendar-based system, a combination of scans, custom watch list columns, tools, and that knowledge meshed in with some options trading to nail this season. We talked about the scans before. I have actually 4 different scans, but I think that the columns are really the winner here, because when you scan, you can see what's coming up, but even more importantly, you can see the ones that have the most meat on their bones, okay? So not only can you identify those tickers with the scans, but then you can flip over to the chart and you can see, okay, well, where am I in relation to the hot zone? Am I pulled back? A question was, hey, do you buy pullbacks? I try to almost always buy pullbacks. Sometimes I don't. Sometimes I'll buy a breakout because, well, it's a really nice breakout and I really want to get in. But I do try to be as disciplined as possible. The stats are what helps you fight your emotions. Because if you're in something and let's say, you got into Snapchat like I did last month and suddenly it's down 7% the next day. Well, you have stats at your back that are going to show you, okay, I know this is down right now, but this is a really high probability shot of it trading higher. So, I use it for a variety of things. Real statistics and a visual gauge. It tells you when you're entering or in the hot zone, what type of move can be expected and what type of post-earnings move the ticker displays. So really, there's just no more guessing games. You can know what typically goes on during earnings, what it typically does post-earnings, and what it typically does before earnings. So this is just my all-around tool. I use it for both the pre-earnings and I also use it for the earnings trades, because we also have some additional stats on here that are going to pop up right before an earnings report that is going to give you some basic gauges, okay? This is going to pop up on your chart and it's going to say, all right, well, I think that on average, it's either going to move within the shorter time frame or the larger time frame. That's going to give you some zones for your trades. It's also going to give you some stats for how the ticker has gapped in the past, along with how many quarters you have analyzed. You can also use it for post-earnings trades. Post-earnings trades, for example, on Microsoft. Microsoft almost always trades higher after earnings, all right? So we didn't go over those types of trades a lot, but you can absolutely use it for post-earnings trades as well. We also have the volatility tool down here at the bottom. When you're trading options, you want to buy when the volatility is low and sell when it's high. Buy when it's low, sell when it's high. Buy when it's low, sell when it's high. And to be able to do that, you have to have a trending idea of how, you have to have an idea of how the volatility is trending, okay? So this is basically an all-in-one quarterly tool. The scans find the setups, the hot zone narrows down the best one, and the methodology teaches you how to put it all together. Your questions are answered? Awesome. I'm almost to the part where I'm going to take questions. 2 minutes. 2 minutes, and I will take all of your questions, all right? We're entering the hot zone right now. That means that the core of earnings season is within 3 to 4 weeks. The right part is right here, right now, okay? So we have a lot of different tickers that are already taking off. We have the NASDAQ that's breaking out here. We have the run into earnings going on, and we have the squeeze, plus we have April seasonality. So I've seen a ton of questions about this already. You know, how do we get the tool? How do we get the class? What I've done is I've put together a very special quarterly profits package that includes everything that we talked about tonight. The basic package includes the hot zone tool, plus the earnings volatility tool, plus the whole strategy class, plus all the scans, plus the custom columns. I also included some bonuses as well. I have, let's see, what do I have in there? I have the terms, I have quizzing, I have all kinds of stuff that I've added as extra bonuses because I see some questions right now. You know, Danielle, how can we, you know, I'm new, what should I do? Every single class that I teach it from the ground up. So I want to make sure that anyone who has never taken a class from me is going to take one class and is going to be able to take that strategy and is going to be able to implement it. So I am going to, you know, pull other pieces from other classes, like perhaps a reference relative strength or, you know, reference the squeeze or something like that. But every class is a complete package. So even if you're new to options, definitely you should be able to take this and digest it and learn from it. And even if you've been around here for a while and you've taken multiple different classes of mine, this is something that you can combine with those other classes. So you can combine it with the Phoenix Finder. You can combine it with Stack Profits because this is just one key setup that comes around on this quarterly time frame, okay? And really, right now, it's the absolute best one to focus on. So when is the strategy class? The strategy class is going to be this Saturday, April 10th. In great news, it is all already recorded, and I'm going to be doing a live version as well on Saturday. So if you're not able to make it at that exact time, you can buy it right now. You can get access to the tools and the scans right now, and you can watch the class anytime you want. If you love coming to the live classes, I'm going to be there this Saturday at noon teaching this class in person. Now, there's also going to be a variety of live trading dates, and these vary based on the packages. If you look at the packages, you can see that number one, I absolutely wanted the tools to be included in the basic package. So the indicator is included, the scans are included, the custom columns are included, all of that is in there, okay? All in the basic package. The basic package is going to comprise of the class plus all of those tools. Now, when I recorded the class, it was probably just under 4 hours. So when I do it live, it's going to be a little bit longer because there's going to be a lot of questions. So I would guess probably about 5 hours, but we do take breaks. But the recorded version is very straightforward, and you know, it's broken into 15, 20-minute chapters, and you can go ahead and scan through the ones that you want. When you're looking at the pro and elite packages, okay, the pro package is going to include 3 days of live trading, and the elite package is going to include 6 days of live trading. It's going to be the 3 days from elite and the 3 days from pro combined. And you know what's really awesome about this is we have a bunch of members who have already got their hands on the hot zone, and they are loving it. I think that this is probably my most favorite part. Because I love creating things that help other people. So when I have people emailing me and sending me messages on Twitter, telling me that they love the hot zone and they love the class and everything else, that makes everything for me worth it. So when you look at the scanners that are included, there are 4 different scans. There's my daily squeeze breakout scan where I'm looking for high probability relative strength winners. There's also my 21 bar scan where I'm specifically looking to identify run into earnings tickers. All right. Run into earnings tickers. You can see right here that it includes those custom columns. And yes, there is going to be an indicator installation session. I think it's tomorrow, right? So you can go to the page, which is going to be, I just posted it above, simplertrading.com/earnings. And you can check out every single thing that is on this page right here. You can scroll down and you can see, there's 2 days and 10 hours left until the strategy class starts. All the details are all in here, okay? So make sure you check out that page. I also posted it up above. And what platform does it work on? It works on Think or Swim. Okay, the indicator installation is tomorrow, 3:30 to 4:30. Thank you, Brad. So the indicator installation, it's on my next slide, silly me. So here we have the basic package that includes the indicator installation session, all the scans, everything else. If you want the pro package, this is going to include 3 live trading dates, April 13th, April 15th, and April 16th. During that time, we're going to be focusing on some of these key reports. We have JP Morgan reporting, Bed Bath & Beyond, Taiwan Semiconductors, United Healthcare, Delta. These are very critical reports that are going to kick off the beginning of earnings season. Remember I was talking about earlier and I was saying, hey, banks are usually going to set the tone for the beginning of earnings. We are going to get to trade those together, and that will set the tone for the rest of the run in earnings season. For those of you who are going to be joining during the elite session, not only will you get to trade the first week of bank earnings, but you're also going to get to trade the first week of FANG earnings. Netflix is such an important ticker. This ticker always reports first out of the FANGs, and depending on what it does, that is highly going to impact what the rest of the FANGs are going to do. We also have some other tickers coming up. There's going to be DR Horton, LRCX, Tractor Supply. These are some pretty critical ones that we're definitely going to be trading during the elite package. So the elite package is going to include 6 days total. It's going to be the 3 pro days plus the 3 elite days. And those are going to be on April 20th, April 21st, and April 27th. I also mixed it up between the close and the open because I wanted to make sure that we could do a variety of different sessions. So there's 3 packages to choose from. And Danielle, you should tell John that we should include payment options. So actually, we don't offer payment options, but we do accept PayPal credit. And with PayPal credit, they actually have 0% interest for 6 months. So it's a really funny story. I actually used PayPal credit in the beginning when I was first learning from John, and I wanted to come to a mentorship so bad because I wanted to learn in person. And my parents thought I was insane because, of course, I was still pretty broke at the time and just trying to live off of my trading on my small account. And I did. I charged a mentorship, Simpler Trading mentorship on PayPal credit, but I paid it off within 6 months. So no interest, and it was a great investment. So we do have that option. But if you want to learn more, you can go to simplertrading.com/earnings, and I'll absolutely go through all of these questions right now. So why don't you have the indicator on other platforms? So the person who coded it, which is Eric, he said that there was just so many lines of code and it was so complicated that he wasn't able to replicate it exactly. He wasn't able to replicate it exactly in TradeStation. So we're still working on a solution for that. But as of right now, it's only available in Thinkorswim. So if you don't have Thinkorswim and if you have Fidelity, what we recommend is we recommend just downloading Thinkorswim. You don't even have to have your money in it. You don't even have to trade in it. But most of our tools are going to work primarily in Thinkorswim. So you can still use a Thinkorswim account and trade in Fidelity and just use your charting there. How much are the mentorships? So they were $5,000, but we haven't done them because of the coronavirus. Danielle just signed up for Elite. Awesome. Great, Space Junk. We will see you there. Great stuff, Danielle. I'll be signing up tomorrow. Awesome, Rick. That is excellent. Yes, you're going to be there as well. You're super excited. That is amazing. You may not be available during the dates mentioned. If we pay now, can we join the classes later? So everything is recorded. So there's not going to be like another option to do a different live trading day or anything like that. But if you're not able to attend, then you still are going to get those recordings. And also with the live trading dates, you're going to get all the alerts. So when you sign up, you have to log into your Simpler Trading app. And those live trading dates are going to come with push notifications. So even if, you miss the first 2 hours or whatever, you can still check your notifications and take action when you get to a computer. So you will be attending the Elite. Awesome, Cookie Monster. Looking forward to seeing you there. You just signed up for Saturday and the Mastery. Can't wait. Just did the small accounts with John and can't wait to join your class in Mastery. Awesome. That is great. You've got all 6 live trading days. Great, Brad. That's going to be awesome. I think it's going to be a good time. So let's see. Update the package. The scan document has the same URL. So that was updated. You should be able to, can you refresh and see if it's there now? Because that one should be updated. And I will message support right now to make sure that is fixed. Bill B says signed up and ready to go. Amazing, amazing, amazing. What amount in your account did you start off with to pay it off in 6 months? Oh man, let's see. That was I would have to go back and look, but I think, what year was that? Daryl would know. So I think it was 2013 or 2014. So typically what I've done with accounts is I usually start them around 5,000 and trade them up to about 25,000. So I can't remember, honestly, exactly what size account I was trading at that exact time. But what I've done just pretty much consistently is just do 5,000 to 25,000, 5,000, 25,000, 5,000, 25,000. So that's what I'm guessing it was. Danielle, I've already signed up for your class. Just a suggestion, it might be useful to include an average pre-earnings IV and average IV drop since we also benefit. Ooh, that's a good idea. I like that. So I'm going to send that right over to my support team right here. Danielle, when the setup does not work, do you have a stop loss? So I used to use 50% stop losses, and actually what I started doing because the volatility has been so high is I've started using a half size position with no stop. And the reason why I've been doing that is because when you have a 50% stop and you're trading stuff like Snapchat and Etsy, these tickers are moving, 5, 6, 7% in a day. You're basically just going to get stopped out without even allowing your trade to work. So in a normal trending momentum market, I do use a 50% stop, but right now, due to the volatility of the past couple months, I definitely have been just using smaller size and not using a stop. But I do go through in the class, like when the trade is not working. Would you please outline one example of how you use this tool on a relevant ticker, because explaining your entry criteria, because I'm missing how the indicators actually applied. Okay, so what you do, let me get my tool. Dun, dun, dun. Okay, So what you're doing, and this is also, by the way, like a major part of the class, what you want to do is you want to first start off with your scans. And let's see if I can find my scans here. Dun, dun, dun. So you want to first find your scans, and if I didn't have so many windows up, it might be just a little bit easier. So let me grab that for you. But first, what you do is you use your scans, and then what you're doing is you're looking for something that fits your criteria. So are you wanting to get in something 10 days prior, or are you wanting to get in 14 days prior, or are you wanting to get in 21 days prior? You know, what is the time frame that you want? For me, I like the 21-day time frame. So I'm looking for something that is around that zone where I can say, okay, you know, we have about 20 days. Let's look for something that has a huge move. Etsy, boom, huge move. GM, boom, huge move. Apple also has a big move. So then you go to your tool and you say, okay, well, I know that Apple has a big move, and I know that starting right around here, it's probably going to take off. So let's get into an options trade, ideally on a pullback. On this one, I actually did buy the breakout. I do that sometimes because I get tempted. But what you're doing is you're looking for the time frame. You're saying, okay, we're coming into the hot zone. We have something that is high probability. It normally moves $10. Boom. Here's, you know, you're right near the zone. So let's get into this and trade the move higher into the report. And as you can see, it was consolidating, and then boom, it starts taking off going into the report. So basically you just use the scans, you find a ticker, you go to your chart, and then, you know, a lot of that is, it's covered like in very good detail during the class, but that's the basic process. So I hope that makes sense. Yeah, that's all in the basic package. What strategies do you teach in the course? So this course is so comprehensive because I actually teach calls, put credit spreads, butterflies, and also unbalanced butterflies and iron condors. So basically what I've done in this class, and I can show you exactly what it looks like because it's already all broken out. Basically what I've done is I've separated the sections because I used to be a teacher, right? So I try to make everything very cohesive. So I set it up with a strategy, like why do we trade earnings? How do we trade earnings? Key facts to know, quarterly trends, 3 distinct trades. Here's how you use the tools. Here's the run into earnings. Here's how you trade the run into earnings with options. Here are several examples. Here's how you trade an earnings report. Here's how you trade the earnings report with options. Here's many examples. And then here's how you add, you know, the Phoenix Finder or the squeeze or anything else. So I actually covered 5 different option strategies in it. So it's very comprehensive. I actually don't teach calendars. So calendars, no, double calendars, no. But that's the great part about the tool. If you have the tool and you know how to use calendars and double calendars, I mean, you can apply it with those as well. Once you have the package, will you have access to the scans for eternity? Absolutely. So the best part about this, and like that's what's great about classes, is you buy a class one time and you have all of it. You have the scans, you have the tool. I did actually make some last minute updates. So you guys are going to get another version of it probably tomorrow or the day after because people are always coming up with suggestions, and I added a couple more things because I just have to do that. So you will get updates if the tool is updated. And as far as the scans are concerned, I mean, you just run the scan yourself. So, you know, you have the scan, you have the codes, and it's not something that needs to be updated by me. You just run the scans and you use the methodology to pick your trades. This looks wonderful. Will there be installation support after the 8th? So we have a great support team. They're always there to help you. You can always email support@simplertrading.com if you have an issue. You can email me as well. I get tons and tons of emails, so I try my very, very best to get back to them in a timely manner. But we also have a large support team that answers emails all day. So I always recommend to try to ask them first. But if you have a personal question about like your trading account or your style or something that is trading related that you know that I need to answer, you can definitely email me at Danielle@simplertrading.com, which is just DANIELLE @simplertrading.com. Now, I always get a ton of emails after the webinar, so I will do my very best to answer them tomorrow and the next day. And I will get back to you as soon as I can. So what other tools do you recommend for the charts? So like you'll notice, I mean, I do use other tools. I do use the squeeze. I do use the turbo VZO. Those are additional tools that I use. The way that I taught this class though, is I taught it so you can do it just with this tool. So if you add the squeeze, definitely going to be beneficial. If you add the turbo VZO, the turbo VZO is great because it shows turning points. I wouldn't stress out about it too much about getting additional tools, but if you really do want an additional tool and you're going to get the class anyways, I would definitely email support, because if you're going to buy more than one thing, they will probably give you some sort of something. So if you email support@simplertrading and say, hey, you know, I really want the turbo VZO with the class or something like that, then they can probably hook you up, I would guess. How do you choose the middle wing of the butterfly based on the hot zone indicator? So what you're looking for on the hot zone is going to be these target zones. So these target zones are going to pop up. And what you're doing is you're looking for a confluence between the price and your target zones. So I use a lot of Fibonacci in my trading as well. But again, this tool is really meant to be like an all-inclusive tool where you should be able to use it without too much other stuff. In the live trading days, we only trade the run into earnings, or we also do some overnight trades and post-earnings volatility crush trades. It's going to be both. So especially that first week of the pro live trading, it's probably going to be a little bit more run into earnings just because earnings season is just ramping up at that time. Once we get into the second week of elite, it's probably going to be a little bit more actual earnings trades because that's when earnings season is ramping up a little more, but it's definitely going to be both. I think I know the answer, but will this work with a larger account, say 100K plus? Oh yeah, for sure. And that's why it's great when you have, you know, the scans and you can say, hey, you know, I don't want to trade these little movers, you know, Honeywell is going to move 2%. That to me is something that I was looking for when I started trading, because I could not trade the types of tickers John was trading. So for me at that time, that's what I wanted. But for those of you who have larger accounts, you're more experienced, you know, you want to do those bigger moves, like here you go, there's Shake Shack. So you can really pick. Is the elite packet per month or is it one time? This is all a one-time payment. One-time payment. Once you buy it, you have it. You know, don't have to pay for it again. So got to run. We'll check the chat later. Okay, awesome. You got elite, now applying for a week of PTO. Awesome. Does the basic package include the various option strategies, how to choose which, and how to set up the spreads and butterflies? Absolutely. Do you use straddles? So I don't usually use straddles because I try to focus on small accounts, and those are a little bit more expensive. But I do use iron condors. So, you know, basically the same thing except for just with protection. So I do teach iron condors in class. You know, you're selling the middle strike and then you're buying the outer wings as protection. If you want to do the straddle instead, you would just not buy the outer strikes. If you buy the course, can you watch the recorded one and attend the live one? Absolutely, you can. If you get in on a 21-day trade, do you sit on it for 21 days or do you set a target? So that is definitely covered in the class. Primarily, I set a target and I get out when the target's hit. Let's see. Do you make these trades in your trading room? Yes, I do. So the great thing about the trading room is, you know, you can jump in, you can see a bunch of different traders, you can get some trades. The best thing about the classes is that you're taking it into your own hands. You're saying, hey, I like the idea, I like the strategy, I want to learn the ins and outs of it. Maybe I'm going to do it the same way as you. Maybe I'm not going to do it the same way as you, which is completely fine. You know, if you take this tool and you say, hey, you know, actually, I just want to trade the post earnings trades. I mean, you can absolutely do that. So the best part about the class is that, you know, I'm going to tell you the way that it works best for me. And then you can take all of that information and you can use the tool and the scans, and then you can just go with it and do whatever you'd like. You can definitely download it now. The update was I'm gonna add so basically I'm gonna add, you see how I have all these bubbles here? What I wanted to do was have an average. So on the top, we have the pre-earnings averages, which is a consolidated, you know, average based on these bars. But with the earnings trades, what I have is I have the market maker move, this IV1 standard deviation move, but I don't have the average of these moves. So what I'm adding is okay, what is the average gap and what does that mean in dollars and percents? Because that's going to help me even more with my earnings trades. Are there options to get 6 days in every quarter of the year beyond this one? So I've thought about that. I'm not sure what I'm going to do. I love trading the run in earnings. It's really it's really one of my favorite. I hate to say it's my favorite setup because I love trading the Phoenix. I love trading butterflies and everything else. But the reason why I like it so much is just because it's so consistent and it's based on the calendar. I always know when it's coming. And I'm just one of those people that I don't really like surprises very much. So that's why I like it. In the training, do we have the ability to ask questions? Yes. So you can definitely chat. You can definitely ask questions. During the live class, I'm going to be there. Everybody's going to be there. You guys can talk to each other, all that good stuff. So that's going to be on Saturday. Obviously, in the recorded version, you can't ask questions, which is why I'm doing a live version. During the live class, I will definitely talk about Fibonacci, not as much during the strategy, but I definitely will use it a lot during the live trading. If I update the tool, you will definitely get updates for that. How do you get the pre-earnings 21 days column? So when you buy the class, it is going to come in the class. So when you go to your classes, let's see. You go to your classes and then you can just click on the class. And then all of the scans and the watch list columns and all that stuff and the settings and everything else, they're all down here with all the bonuses. Yeah, the market is taking off for sure. Teaching is satisfying and you learn just as much from teaching. That is absolutely the case. So, you know, the more and more I teach, the more and more, you know, I put all this stuff together. I have to be very disciplined and it absolutely makes me a better trader. What level of trading privileges you have to be approved for? It helps if you have level 2. If you don't have spreads enabled, it can help to take a class because what you have to get that enabled on your account is you have to have some experience. So if you say, you know, hey, I know how to trade spreads at least a little bit, then hopefully they will approve you for the next level. But usually on level 1, you can trade calls and puts. And then on level 2, you can trade spreads. Do you do some of these trades later in your stacked mastery classes if you want to continue learning? Yes, definitely I do. So the thing that's great about the masteries trade alerts. Like trade alerts, you get the alerts. The thing that's great about classes is like you get the whole strategy and you can do it yourself. And you can, maybe I'm trading Netflix and Etsy and maybe you want to trade other tickers. Is it credit or debit spreads? You can do both. Primarily, I covered credit spreads in the class, but we can talk about debit spreads too. Can you attend a different live strategy session? If you missed this one, no, but it is recorded. So this is going to be the only time I'm going to do it live. This is going to be this Saturday. Can you set the scanner to look for longer than 21 days? Yes. So you can set the scanner and you can also change the indicator too. So if you want to actually come in and change the, if you want to change the time frame on the indicator, you can change it to longer or shorter days if you want. So it's customizable. See you tomorrow. You signed up. Awesome. That's great. Maybe next month or next quarter. So we usually don't teach the strategy class again. How to get access to your trading room. Slow learner would need more than a few classes. You say that, but I dove into this not knowing anything about the stock market. Nothing. Literally brand new. My degree was in international law and human rights with a minor in philosophy. I avoided math and science to save my life. I was like, I can't do this. No. And I dove in and I just started taking classes from John. So because I had that experience and because I know how difficult it is, I really try to make everything step by step really easily to digest. What is the special Danielle talked about if I add the squeeze and turbo VZO indicators to the elite package? So if you want to add additional indicators, you're going to need to email support. So just email support at Simpler Trading. Just tell them, you're interested in some additional indicators. And if you're getting like a custom package like that, they'll pretty much very, very likely to make you a deal. Is the live session on Saturday also recorded? Yes. So you have the pre-record and then you also have the live one. There's going to be 2 recordings of the class. And the reason for that is just because, I don't know. Do you guys like having the live class or do you like having a pre-recorded class? Both. Perfect. Is there a time limit on the price of $5.97? I don't think there is. I'm honestly not sure. Sometimes there is a price increase after the live class starts, which is going to be at noon on Saturday. I'm honestly not sure. That's a little bit out of my wheelhouse, but a lot of the times there is a price increase after the class starts. The class starts at noon on Saturday. So I know there's a couple other questions. I've tried to answer everything. If I missed your question, please let me know and I will answer it right now. I'm trying to answer all the questions. I know that you guys can't see because you're in webinar mode, but I know that you're in webinar mode, but there's so many questions flying by that it's hard for me to get to all of them. On Saturday, the class is live. Can we attend the class on Saturday, then decide if we want to buy it or not? No, because you have to buy it to get access to the class. What are the scans? So the scans are my relative strength, daily squeeze, buy scan. That's my #1 go-to directional momentum scan. I kind of overlap those with the 21 bar run into earnings because sometimes you're going to have tickers that aren't within the time frame, but they are in a really good squeeze. Like for example, Disney. So Disney is in a squeeze right now, and it's not within the 21-day time frame. So that would come up on the first scan, which is going to be the momentum breakout scan. The second scan is the 21 bar zone. The third scan is going to be the post earnings move. So for the 2x move trade, we didn't talk about that a lot during this webinar, but basically what that is when you have a massive explosion post earnings, like for example, this move right here on Disney, and you're looking for a momentum trade. So yes, there is a scan for that. And then there's also a scan that identifies what tickers are reporting in the next 2 days. So that's going to tell you, you know, hey, which tickers should I focus on for an actual earnings trades? Hope you spend more time on the scans on Saturday. I'd like to know how you pick through the watch list, especially when it brings up hundreds of tickers. Oh yeah, definitely. So we can definitely talk about that. How are we going to go through this 3 scanners in training? So this was actually something that people had asked for that I didn't anticipate as much. So I'm actually going to add another bonus video on it. I'm hoping that I can get to it on Saturday. I don't know how long the questions are going to take. And if I add it to the end of the class, it might be a pretty long one. But I am absolutely going to either add it at the end of the class in more detail, or I will add the recording. But I think what I'm going to have to do is I'm probably just going to have to do it live, because I know you guys want to ask questions, right? So I'll probably just add that to the end of the class. And then also, we are definitely going to be using the scans and the tools in the live trading. So, you know, that's I will include it for sure in the strategy, but that's what we're going to be doing like the entire time in live trading too. Most of your trades are bullish. Is there going to be any strategies for the downside? So the main strategy for the downside is going to come with the actual earnings trades. So for example, let's see, can you think of a ticker that always rolls over and dies on earnings? So like Zoom, for example, okay? Like this one, I shorted it on earnings the last 2 times. So usually with an earnings trade or a post earnings trade, those could be bearish trades. But for the run into earnings, the entire concept is that a ticker's trading higher going into the report because it's a bullish ticker. So that's not going to have bearish trades, but on the actual reports themselves, and also perhaps the post earnings moves, those could definitely be bearish trades. So yeah, good one. So for Home Depot, you can see like, look, it goes down, it goes down, it goes down, it goes down after earnings. So like that's one that would make sense. Costco is one, for example, that this one does not actually have a good run into earnings. So, I mean, if you wanted, you could say, all right, well, I'm going to bet on it going lower going into earnings. You can use the strategy however you want. I don't usually do that just because, I mean, I just love the post earnings momentum, or the pre earnings momentum. But that's the best thing about the tool. You can look for, you know, you can look for tickers that do that, and you can definitely trade it that way. So if the trend is down like 2007, 2008, would you be doing downside trades? So actually what I've found is that even when the market is trading lower, the tickers that have anticipation are still going higher in the run into earnings. There's not going to be as many of them as when you have a really strong bullish market. But this is one of those things that, I mean, the ones that have a high probability shot of trading higher, like if you look at Netflix, for example, I mean, you can go into multiple quarters being down and it still rallies. Rally here, rally here. Last quarter, it did not work. This quarter, it was down on the 200 simple, and it's rallied, you know, already $50 within the time zone. It was down right here. I mean, look how bad it was down. What was this? Q3 of 2019. It was all the way down at the dead lows, and it rallied all the way going into earnings. So you love your Phoenix, you love my Phoenix Finder with the hot zone. Glad you covered it in your recording. Yes. So the last chapter of the class, I did add that in there for all of you guys who I know you've taken many classes of mine, and You want to know how to combine the strategies, how to combine it with the Turbo VZO, how to combine it with the Phoenix. I'm never sure if I should include something like that, because for the people who it's their first class, I don't want you to think, oh, now I need 5 different things. But I did want to include it because I always have people asking me how to combine things. So the last chapter of the class is, how you combine it with my other strategies. You are going to get a recording of this webinar. You're going to get a recording of this webinar, yes, as soon as I finish. My amazing husband, who is in charge of all the technology, is going to upload it and send it to everyone. Yeah, and I'll also post it on Twitter here as well pretty soon when I get that, and it'll be posted in the trading rooms. These candles are the trend strength turbo candles. These candles shift colors based on the strength of the trend. Starbucks. All right, so I think that I answered most of the questions. If I did not get to your question, you can definitely let me know. You can email me, Danielle@simplertrading.com. We also have our great support team in the background. I see a ton of people signed up. I'm really looking forward to it. I think this is going to be a great class. I think it's really timely. I think this is a really important season, and even better, I mean, I love the summer season too. So usually, we have a pretty good run into earnings in January, pretty good in April, great during the summer. October can be a little bit wishy-washy, but last year it was really good. So cross our fingers for this year. But at the end of the day, what we have is we have the stats behind our ideas, and that's the entire point. We have an idea, and then we're using the statistics and saying, okay, I think Starbucks is a good one, so what time frame is going to be better? Do I use the early in and out candles? I used to, but then I developed my own. So these are the candles that I developed myself. They are based on Fibonacci, and they're based on the strength of the trend. So they're actually not correlated to the in and out of the squeeze. They're correlated to when the trend is shifting and when the trend is strong versus weak. All right. So the candles are not included with the hot zone. What is included in this package is going to be the earnings volatility tool, which is down here, plus all these screens right here, plus all these stats, plus these target zones right here. All of that is all included. The only thing that's on this grid that is not included in the class is the candles. Thank you, Danielle. You do a wonderful job. You are a great teacher. Thank you so much. Great job, Danielle. Keep up the great work. You're helping all of us. See you in class. Excellent. Thanks for your time. I'll get this product. It is great. Amazing. That is very awesome. Well, I'm really looking forward to seeing all of you in the class. You're getting it today. I'm the best. Oh, thank you. That's very nice. I appreciate it. Well, I love being here with all of you. I love sharing this stuff. I mean, really, like I said, I do it because, well, I would never be here if I didn't learn from the people who came before me. So this has changed my life. It continues to do so. It continues to be a pretty wild journey, to say the least. But love trading, love being here, love teaching, and I love making awesome tools that make my life a lot easier because, well, at the end of the day, nobody really wants to be sitting around for 5 hours every day trying to find a ticker. You just want to find the ticker and then trade it. So yeah, you can understand clearly. Awesome. I try to make everything as easy as possible because, like I said, I'm all about patterns. I want to make things visual, want to make things easy. So awesome. Well, thank you all so much. If you have any further questions, I'm going to put my email up here for you. Danielle@simplertrading.com or support@simplertrading.com for questions. And I think that I got all of them. So like I said, no, you do not get the trend strength candles with it. That's the only thing on this grid that's not included in there. But if you want them, just email support and say you want to add it to your package. Okay. All right. Well, I will see you in the next one. Thank you very much for your time and have a great night.